You got to see that skit. Yeah, I forget the guy's name. Keenan Williams or something. He's pretty funny. Okay, let's roll. I'm ready. Looks right. Keenan Thompson? Yeah, all right, Keenan Thompson. Well, this is as good as I'm going to look today. How we doing today? Welcome to the closing beat. We are financial advisors here at Jazz Wealth. And, and we just like to talk about the stock market every day. Keep you updated on what's going on. And tonight, actually, we're going to do wine and wealth. I'm excited about this one. We're going to cover how do fund managers buy dips in the markets, right? If you picture fund managers have large sums of money, they can't just say, like, that's the price. I want in at that price. So we're going to cover that tonight and sort of translate that into what we're doing here at Jazz, because we manage our own funds, right? So we don't buy mutual funds for you and then just hope we pick the right ones or something. We actually build our own funds and manage them here for you, and you can see every last little bit of it. So if you want to join us, go to the website, jazzwealth.com. Appreciate you guys giving us a shot. And if not, that's cool. Hang out. We'll just talk for a little bit here and go through the markets. There's not much to say, really. I mean, market went up, right? Everything pretty much went higher today. Broad rally. Small cap growth, index, small cap value, mid cap value, large cap growth, large cap index. I mean, it was all higher. I don't know really how else to say it. If you look at the right-hand side of your screen there, you could see by how much the markets actually rallied today. And a good rally, but for what, right? Today was a really good visual showing of an oversold rally. There was no reason for a rally today. GDP numbers come out today. Negative GDP, minus 1.4%, I believe. We were expecting growth of 1.1%. And you could tell it was bad because all the really bullish people out there were like, yeah, but there wasn't any government spending. You know what I mean? Like, the supply chain, that's what it was. We couldn't get stuff to people. And so that's why it was down. Consumer spending is strong. All right, I'll give you that, right? We're still spending money like crazy. I don't know why that is, but not a good sign. And likely, just so you know, the GDP numbers, this is the first one. So they tend to get revised. And I would bet you they revised them positive here because of these technical factors that Biden referred to earlier today. So that wasn't really good news, right? Because we don't know what's going on there. But the market didn't care. It just took off, right? And everybody's like, that's a Facebook-led rally. No, that's impossible. That can't actually happen. The technical makeup of the market makes it so that Facebook cannot move the market this high. But nonetheless, it caused people to buy. You can't fight what people want to do during the day. They're excited throughout the day. I'll just show you here. Throughout the day, if you were to look, there was very little in the way of a pullback, right? So here's the start of the market. Oh, no, right here. Here's the start of the market. I'm using the futures, right? Little bit of a sell-off to start the day. Reversal right at the 10 o'clock reversal time. And then really not much. Just a little pullback here. Really strong break to new highs. And then really at the end of the day, just kind of some exhaustion selling there, right? Because we just up so much on the day. Day traders want to take their profits. Short-term traders go, wow, in one day I made 5 days worth of profits. I think I'll sell. Right, so that's all that was really happening there. So anyways, if you look at the S&P, you got 2.5% gain on the day. That's awesome, right? Let's go back over here. No, that's not what I want. Go back to the daily chart. So we're bouncing off these lows, and I'll use this because I've already got these lines drawn here for you. And for the moment, that's your support. That's your line in the sand where people have placed their foot down and said, that's it. We're not going any lower. I like this area. I want to buy. That's the mindset of the market. And so what that means is the next move higher becomes this prior low as our ceiling, or at least temporary ceiling. We know that there was a lot of action there. So on the way back up, that might be the next spot where we see a little resistance. If we do not make it that high, that's in fact a very bearish sign. The good news is I have no idea what's going to happen, so we will now look at those areas and say, well, let's see, right? We know what we're looking for. We know how to play offense in this case instead of playing defense, and so we'll check it out. Now, here's what's interesting. 2.5% gain in the market. I think you can see it there. So using our research site, this is free for clients, and of course, if you join the research site, you can use it there as well. jazzwealth.com/research if you like. What I did is I said, all right, let's take the granddaddy of all ETFs. That's what it's referred to as, granddaddy of all ETFs. The SPY, it's the oldest and first ETF ever made, and it relates to the S&P index. That's all right. Well, we have a 2.5% gain today. If we were to look back in history, how often does the SPY have a greater than 2.5% gain in one day? And I just use 30 years just as a habit. If you look off over to the right, it's actually a pretty cool tool. So in one day, this has happened, in fact, 134 times, right? So that's about 4 times a year. So it's a pretty odd event. It's exciting, right? To look and see, all right, that's one time that we actually get to have that. It normally happens 4 times a year. What's interesting, look forward. Nothing, right? We're looking forward one day here. The way this tool works is whatever you put here is the forward stats you get. So if you were to put in 2 days, then you would get the next 2 days forward stats. Anyways, we're just looking at the one day performance. This lets you believe that tomorrow is likely a pretty quiet day and there's really no guessing which direction it goes. Average performance is down about 0.25%. Median is flat and positive half the time, right? So 50-50 shot on what happens tomorrow. So it lets you know that if you were exciting today, you had a lot of trading and you were, swinging away and buying all this stuff and doing what you have to do, tomorrow's not going to have that same momentum behind it. Or historically, it wouldn't have the same momentum. You wouldn't want to make that bet. So cool yourself down. Relax a little bit and say, okay, tomorrow's going to be a lazy Friday. Don't go in swinging, buying stuff left and right, because the odds are against you. What we can do is now in the S&P, we can look forward. We know what one day is, so let's get rid of that. Let's look forward 1 week, 1 month, 3 months, 6 months, a year. All right, let's do that. So we'll take that data and we'll say, all right, spread it out over different time periods so we can actually see what's, the different time periods and how they'll look. And hopefully this will load, unless I need to reload it. And if that's the case, I'll just come back. But you can take this tool and actually look. By the way, you can look custom, right? I just set it to default. I don't do anything special here. But you can actually set it to default time periods and be as crazy and stuff as you want. And I guess I'm not going to get it to load. Am I still streaming? Little hiccup there. All right, I'll come back to it. Nonetheless, it is a rather rare thing to see the S&P higher significantly tomorrow, or lower significantly tomorrow. It's just not normal. So anyways, looking at the S&P here, we are still down about 10% year to date. And if you look through the stocks today, you're going to find a lot of the large cap stocks. Alphabet tried a recovery today after earnings yesterday. Amazon did try to recover yesterday. I should point out that it is down quite a bit after hours. They did have their earnings there. Well, actually, everything earnings related was pretty much horrible after hours. Apple might be the only one that held up. I'll check in a second. But Amazon is currently trading at $2,600. So I don't know if you can see, but my little cursor, that's off the charts. It is going to open hyper-extended to the downside tomorrow. But it had a good day today. Apple, let's talk about that real quick. It was the only one besides Roku with earnings after hours that actually had a little bit of a gain. Yeah, Roku up about $95 and Apple also higher. Robinhood was a weak one. I'm bouncing around a little bit here, but Robinhood down over 10%, I believe, on their earnings. And Intel, I think, was the other one that came out. Intel also lower, not quite to fresh new lows, but earnings after hours today was not pretty for the most part, unless you just like staring at Apple. Anyways, looking around, you got bank stocks today, or some of the bank stocks. Visa, MasterCard, all higher on the day because GDP numbers showed we're still spending. Their earnings mostly showed we're still swiping. Well, that's good for those guys there. So they enjoyed a little bit of a rally. The larger banks did okay as well, just nothing amazing compared to the market. You got Wells Fargo up a little bit, JP Morgan up a little bit. These are all very extended. State Street finally reversing course just a little bit. If you look at the regional banks, U.S. Bank also reversing course. Just small rallies in the financial space there. Over in healthcare, good stuff going on there. United Healthcare with a nice little bounce. Thermo Fisher with a nice gap up reversal bounce. I already said United Healthcare. I wrote down a few others here. Abbott Labs, as choppy as can be, but it had a decent day. Humana also higher on the day. These are the strong stocks in one of the stronger sectors recently, just getting their bounce. And people recognize that and say, well, okay, well, I'll take a shot on some of these. And that's what you have. Over in retail, you got Walmart higher on the day, Costco higher on the day, Target higher on the day. Right? Just green. Right? What do you want me to say? We should look at the weak stuff. Anything weak was earnings driven or a fierce competitor of someone who reported earnings. So, for example, O'Reilly Auto Parts comes out with earnings, no bueno. And what happens there is you end up taking down AutoZone, which came all the way back down to the 50-day moving average, and Advanced Auto Parts, right? So that's why those were down, but not really a whole lot else. Like Comcast and Charter and all that stuff, you're going to see those were weak on the day. And that's just earnings driven from Comcast, which took down Charter, and, that's what's going on there. Yeah, that's all I got for the S&P. If we go over to the Nasdaq here, the Nasdaq down 17% year to date, but large cap stocks, mega super duper large cap stocks had their chance at a bounce today, and they took advantage of it, right? Large cap growth, by the way, was the best factor of the market. If you look at it that way, 3.5% gains in large cap growth. That's impressive there. Like I said, earnings after hours was really rough. I didn't dig into a whole lot of it yet, but between Intel, Amazon, and also their competitors, just like I said on Advanced Auto Parts a minute ago, when you look at Shopify, Shopify is down to 420 overnight. You got Etsy's probably down as well. A couple bucks. Yeah, so Etsy's going to make new lows tomorrow. All of that bleeds into the fact that Amazon really, didn't do so well there. And same thing in the Nasdaq. So any stocks that were weak come from earnings-driven names or their competitors. So Algin, we already talked about O'Reilly, we talked about Charter, Tesla just down just a fraction today, but not because of that, and Gilead Sciences. So that's pretty much it if you're looking for something negative to talk about. Sector-wise, here we go. You got tech. Hey, there you go. Tech, the best performing sector today after being beaten to death. Communication services ties it. 4% gains for the both of them there. Every sector was positive on the day by at least 1%. Tech and communication services still one of the weakest year to date. If you look at energy, that was higher today, unfortunately, because oil was up 3%. Oil is in this, some people call it a wedge, right? But oil is inside of this triangular range where it's pinching. The pattern is pinching and pinching and pinching. It will break one way or the other, and we'll be around to see what happens there. Other sectors that stood out today, utilities off the 50-day almost there. Industrials trying to recover, but a very, very weak and sort of boring area right now. Financials, like we mentioned a minute ago, getting a little bit of a bounce there as well. If we go to new highs for the day, there were in fact 5 new highs. There might have been 1 or 2 more by the end of the day, but 42 new lows. Look at Host Hotels breaking into new highs. A lot of momentum there. That's the business traveler right there. Needs a place to stay, and they are benefiting. Pepsi, we talked about this before, looking like it's trying to break out of a little range there in the consumer staple space. Disney finally reversing course. Now, it's a new low for the day, but it did reverse course and finish positive, but not that much. Nothing to get excited about yet. Look at West Pharma, very extended. Right? If you like these rollover type plays, you got a handful of them there. You're also going to have General Electric. It made new lows today, but kind of like how that started to reverse course, and that's pretty much it on the list there. Stocks in the news. Well, Facebook, you've likely seen that Facebook is rallying there. They beat on earnings, missed on revenue. They did guide lower. I don't know why the stock was up so much. 18% higher on the day. Not only did revenues miss their earnings, but relative to the first quarter of 2021, it increased only 7%. That's like the slowest growth since this company has been public. I mean, it is. I know that for it to be a fact. Why are we so excited there? Monthly active users were 2.94 billion there. That actually just missed. And the average price per ad was down 8%. I was looking for amazing things to talk about with this because it was up so much. I thought maybe I've got to be missing something. Ford, interesting one here. Earnings beat, revenues beat, said their full year 2022 earnings would be about $12 billion. That's basically as expected. By 2026, they want to deliver 2 million EVs. And I think they can do it, to be honest there. Demand's still strong. They mentioned supply chain being an issue there for them. Commodity costs up $4.4 billion. Just imagine that. Like, we're like looking at, a banana's more expensive. Their commodity costs up $4.4 billion. But good news for them, pricing power. As I've been saying since before earnings season started, anybody that can say they have pricing power is going to do just fine through earnings, and Ford is doing just fine. at least in response to earnings. PayPal there. So PayPal, they had earnings as well. Basically, as expected, they did lower guidance, and it was a big low. They lowered it by like 25%. So guidance was a big miss there for them. Stock was higher because it was one of those days. It was just, fine, go higher. Total payment volume missed. It was 322 billion versus 323 billion expected. That's $1 billion difference, but nobody cared. Lowered their full year guidance by about 20%, like I said, but nobody cared. It's an oversold stock, right? That's it. That is where you stand. Oh, Qualcomm. There you go. Almost trying to break out of the downtrend there. Earnings beat, revenue beat, raised their guide, but the focus was on the Chinese markets for them, and because these guys don't sell cheap chips. And they said the Chinese markets will recover by the third quarter of 2022, and everybody pretty much wrote China off for the rest of the year, so they were optimistic. That's a good thing. We'll go over here. McDonald's is the other one in case you're curious there. So McDonald's beats on earnings there. Same store sales up 3.5%, but they have a loyalty. I didn't know this. They have a McDonald's loyalty program. It's been around for about 9 months. They got 26 million people on the McDonald's loyalty program. That's good, right? I don't know if you eat there or care, but that's incredible. They beat on earnings thanks to pricing power. That's exactly what it's called. They chose to say, we beat on earnings thanks to strategic menu price increases, pricing power. Sales up 14%, basically in both segments. They do franchises and they have corporate stores. So basically they 14% higher sales on both categories there. And I found it interesting. The Russia and Ukraine stores, they shut down $127 million in costs for that. And some of that is because they had to throw away food, right? I mean, it's not a large cost, but $127 million to close stores in Russia. Anyways, I'll read this off here to you, and then I'll take your questions if you have any. Hershey beat on earnings, by the way. Out there buying your chocolate bars and such. Stock was up 2.5%. That's nice. Tomorrow's earnings, to wrap up the week, are going to be AbbVie, AstraZeneca, Bristol Myers. You get any idea where the action might be? Charter, Colgate, CVX, Honeywell, Newell, and Weyerhaeuser, and ExxonMobil. Yeah, that's pretty much it for tomorrow. And they should all be happening in the morning. There's no after hours earnings tomorrow. There is, in fact, not. Yeah. There you go. Yeah, maybe looking at it that way, Justin. It says Facebook was maybe just an oversold stock. Yeah. Same with Netflix and stuff, but Facebook, I mean, I know a lot of you had it from the earnings drop there. It's kind of sort of a ridiculous drop, and probably some of you have Amazon for tomorrow. Yeah. Yep. Oh, yep. Harry's got a good point. Next week, May 4th, is the Fed announcement. Looking for a 0.5 point increase. They have basically just told you we're doing a 0.5 point. So that's what it will be. It'll just be a 0.5 point. Anybody want to make some friendly bets on that one there? The McChicken went from $1 to $1.29 to $59. Oh, man. I don't know that I've ever had a McChicken. Is it just like a chicken sandwich? Yeah. Yeah, well, we'll see on, not McDonald's, but who is the other one reporting tomorrow? I don't know. What do we got here? Could all the unexpected bounces in Facebook and others with bad earnings just be short sellers covering their shorts? Could be. There's no way to see at that moment that it's happening. You could make an assumption, of course, but yeah, it could be. It's down a little bit after hours. Amazon's going to be the big, talk tomorrow because of, I mean, if it opens at 2,600, 2,610 or something, that's a fresh new low. Think about what happens there. All these people that said, okay, I'm going to take my shot somewhere in here. Everybody is down. There's a fun way to look at it. You go, anybody that bought the stock, at this point, anybody that bought the stock all the way back to about my birthday of 2020, they've all lost money. That's a lot of people. That's a lot of volume to make decisions tomorrow. So if you're looking for short-term action at the moment, that's where it seems like you need to be. Yeah. You think the FOMC could go more than half? I don't know. I think they feel like they've done a good. I'm speaking for them. I don't know. I watch what they say. If you've seen the reports I show you, but I think they feel like they've talked inflation down, and now they're just going to sit back and wait, but still do the half point. I think they feel like they did a good job, right? I don't know that they have, but they seem to make those comments when they're all out there talking. Yep. Yep. Oh, you're welcome. Thanks for coming by, man. Teledoc was a bad one today. Yeah, I got a few emails on that for people that had the old Teledoc there. 40% in one day. That's a tough one. They don't make money. I don't know, like, why is it a good buy? It was total pandemic stock there, and, well, pandemic's over, and you go, great, do I stick with this stock? If they make some money, if they're showing any signs of making some money, but if that was the most ideal situation for them, is to have everybody need to use their service. Now that we don't need to use their service, well, how much better is it going to get for them? So I think that's sort of I'm not arguing on behalf of that. I'm saying I think that's what people were, what they were thinking there. But what do I know? Well, I just lost a bet. I just thought about it, man. I lost. All right. Well, I guess I'll wrap. Hey, Wine and Wealth tonight, right? So it'll be 8 o'clock. I got to move some things around, but let's talk about how you scale into positions, how fund managers do it, and what specifically we're looking for here. I'll grab a glass of wine. I'll hang out with you guys tonight. Be a short class. I won't take too long of your time, but I'll stick around and answer questions as long as you like. And that'll be in the dojo. You'll see it pop up when we're ready to go. And the rest of you, enjoy the rest of your day and your weekend as well. Enjoy.